In this video, we're going to show you how we scan for a price contraction on the weekly chart on TC2000. It's a pretty simple scan. We basically look for a dry up in price volatility near the 10-week moving average, and then we sort our results by the latest volume versus the 10-week moving average, and we apply a relative price strength filter. And that's just so that we can keep results to stocks that have been moving over the past 6 to 12 months. We're not really looking for stocks that are moving off of 52-week lows. And the reason for this scan is simply based on the old adage in trading where price contraction leads to price expansion. We don't necessarily know in what direction that expansion will be, but we believe if we focus on stocks that are trading near 52-week highs and that have some sort of relative strength over a 6 to 12-month period and that are forming a valid basing pattern, we believe that we can increase the odds that the next move will be to the upside. So let's get right to the scan. And again, it's in the TC2000 platform. And we've created an easy scan. We're using common stocks. And then we created a few filters. We have liquidity base. We're just looking for stocks that are greater than $5 per share. And you can use whatever price and volume filters you feel comfortable with. We also have an Atr filter. And that's basically there just to make sure that all results are good. If a stock has a lower ATR, it's more likely that it'll appear on this list just because it trades in a tight range all the time. So we don't necessarily want those stocks. We're looking for stocks that are movers that have recently tightened up. Next, we have the volatility filter itself, and it's based off of the NR7 indicator, which is very popular in swing trading. I believe it was first used by Linda Bradford Rashke and Larry Connors. Basically, it looks for the tightest trading day of the past 7 sessions. So we use it on the weekly chart, and we've gone to an NR4, which means this week's action is the tightest of the past 4 weeks. And then we have the aforementioned relative price strength filter, which is basically we're looking for stocks that have outperformed 80% of other stocks over the past 6 to 12 months. So we hit scan and we come away with 142 results. And what we do is we just right away we sort this list by latest volume. We've already run through this list and found a few stocks that we like. Some may have moved out already, some haven't, just to give you an idea of what we're looking for in this scan. So first stock is BUFF, Blue Buffalo Pet Products, and as you can see the past 2 weeks, very tight price action on top of the 10-week moving average with declining volume. A move above the 3-week high here is a buy entry, and I believe it's just simply waiting for earnings. That's the reason why it's not moving out yet. CORT, here we have a valid basing pattern here, sitting on top of the $5 level above the rising 50 MA. There was a tight range last week on a dry up in volume, and there was an undercut of that week's low, and it rebounded. So far, it has rebounded nicely this week. But again, I think it's still in play. A move above the 3-week high looks pretty good as a buy entry. CSC is pulling back, and again, this scan isn't just to find stocks that are going to move out right away. It's to find stocks that could move out within the next week or next 2 to 3 weeks. So you just have to keep an eye on these stocks. CSC would be in play above the 3-week high and back through the 10-week moving average. EXAR, very nice price action here. There was a drop in volatility at the highs, but notice how the volume has come down quite a bit as it goes sideways. Probably could benefit from another week sideways here, but certainly looks pretty tight. Then we have WATT. The volume has really dried up, and so has the price over the past 2 to 3 weeks. Good sign. So a move above the 2-week high could generate some buying interest. Then we have XTLY, which had 2 weeks of contracting prices and on declining volume, and it moved out this week. So that's basically what we're looking for. We're not looking for stocks off 52-week lows. And so this is the NR4 signal here. This lets me know this has been the most narrow trading range of the past 4 weeks. And this is a dry up in volume. So I put this at the bottom just to confirm what the scan has produced itself. And so that's it. Most of the time you want to buy above the high of the tight week of trading. You know, if that, especially if that coincides with the price action breaking through the 10-week moving average or moving off of the 10-week moving average. So there you have it, just a really easy way to scan for a dry up in volatility on the weekly chart. This can also be applied to the daily and the monthly as well, you know, depending on your time frames. So thanks for watching, and as always, good luck trading.